Roivant Sciences Q1 2027 results just dropped. They beat the EPS consensus, posting a loss of 26 cents against an estimated 30 cents. But revenue completely missed targets, coming in at $1.44 million against expectations of $2.32 million.
Right, a pretty massive miss on the top line.
Yeah. And management provided no traditional numerical guidance either. They just mapped out a really heavy operational calendar for the second half of 2026. The stock reaction was basically a roller coaster.
Oh, for sure. It popped pre-market, what, 2%?
2%
Right.
exactly on the EPS beat. Then it dropped 3% once the market digested the high cash burn. But ultimately, institutional buyers stepped in. It pushed the stock up 1.5% by the close and tacked on another 3.47% the following day.
Well, for a clinical stage biotech, revenue misses are entirely secondary. Investors aren't buying current sales, they're buying the future potential of the pipeline.
Which makes sense.
Yeah, so the real mission for this deep dive is unpacking why Wall Street absorbed that earnings miss and aggressively raised price targets anyway.
Right. And to figure that out, we have to look at the expenses because the cash burn is just massive. They hit $367.8 million in total operating expenses.
That is a staggering number.
It really is. I mean, R&D surged to $202 million alone. That's heavily driven by their anti-FcRn franchise, IMVT 1402 and mosliciguat. Then you add in a GAAP G&A hitting $165.5 million. It's like burning rocket fuel. Is a burn rate like that actually sustainable for retail investors holding the stock?
Look, if you only stare at the income statement, it's terrifying. But you have to look at the balance sheet. They ended the quarter with $3.9 billion in cash.
Which is a huge cushion, yeah.
Right, and here's the thing that doesn't even include the massive $950 million lipid nanoparticle litigation settlement they received from Moderna in July.
Oh, wow. Wait, so adding that in?
You're looking at $4.7 billion in pro forma liquidity.
Okay, yeah, that changes the picture completely.
Exactly. That $4.7 billion means Roivant can fund multiple late-stage trials without having to dilute shareholders. They even bought back nearly $209 million of their own stock.
Yeah.
The street is looking at that absolute buffer against dilution and cheering.
They definitely need that safety net, especially looking at management commentary. CEO Matt Glein called this quarter the calm before the storm, gearing up for a potential brepocitinib launch for dermatomyositis by late September 2026.
And that storm brings us to the notable risks we need to talk about. First, execution risk. The highly anticipated mosliciguat phase 2 trial is notably not powered to show definitive improvement in the 6-minute walk distance.
Wait, let me stop you there. The 6-minute walk distance, that's a standard metric to prove a patient's physical capacity improved, right?
Spot on. If a trial isn't statistically powered to hit that benchmark, the sample size might be too small to prove the drug definitively works. It introduces a lot of regulatory caution.
Okay, but my biggest red flag is the insider selling. Corporate executives recently offloaded about $70 million in stock. I mean, are insiders just cashing out because the pipeline is priced to perfection, or is it standard profit-taking?
It's a very fair challenge. When insiders are trimming their positions, it forces the buy side to really weigh those clinical risks. But, stepping back from the individual trials, this brings up a really fascinating structural point.
What do you mean?
Well, think about the whole picture here. With nearly $4.7 billion in liquid assets, active patent litigation against giants like Pfizer and BioNTech, and these aggressive share repurchases.
Right.
It leaves you with a provocative thought. Is Roivant operating more like a massive hedge fund that just happens to own a biotech pipeline?
Huh. That is exactly the question you need to mull over as you evaluate this corner of your portfolio. Can the clinical science justify the valuation? Great stuff today. Make sure you follow the show for your daily earnings coverage.